that we pay at the end of the year. I'll be speaking to that as well. Then electronic physicalization system. Going forward, government want to track your activities, and for them to do that, they will be plugging their own software into your system. You'll be mandated at a particular threshold. That is, if you are doing a transaction to a particular level, if they know that your revenue is at a particular threshold, they will tell you that you must use our software. You must go digital. In other words, you must have a system. They will not allow you to continue to be using manual recording. They will say, get a computer. This computer, they will give you a software that you must install in your system. When you install that software, as you are posting transaction, they also see it in their place. So you can't say, I didn't do this, I didn't do that. No, I've seen what you have done, and they can tell you, madam, you have done X amount of money, transactions, come and see it here, they can show you. Because they'll be able to plug their own software into what you are doing. And that's what they call invoicing. That software, by the time they plug into your system, it will automatically generate invoice to your customers if you have one. You understand? For us that in water business, our water goes out. We don't have the way we capture these transactions. But what we need to be doing going forward is for us to keep log of somebody loads, what we normally do. 400 bars, 200 bars, 300 bars. At least when they come around for audit, we can explain it. They are given the nature of our own business. We cannot track people that will be buying water 2 bars, 3 bars, 4 bars. They are listeners. They will listen to us as long as we have documented evidence or log that can explain what we are doing. We will also be talking about and conclusion of what we need to do going forward. Now, I'm speaking to this. Now, good thing. We'll talk about thing. Thing means tax identification number. Tax identification, that's the meaning of thing. But to unify it, we have DIN for state tax ID. That they wish you to, if you are an individual that you pay your taxes, you have a TIN number given to you by state inland revenue to pay your own personal income tax. But going forward, you won't have multiple things again. You are going to have a unified thing. They will now call it that will be national tax identification number. That will be the name it will be called. Why was it compulsory? It's compulsory because going forward, you will not be able to do any transaction. You will not. Even if you want to register NAFDAC, if your thing is not working, madam, can you go ahead to do it? With that thing now, you can see that this is your path. They will explain to you. Before you can do anything, your thing must be working. If it's not working, you can't register, you can't renew your license. Be it so, you can't renew your license. So they'll be able to deter you from not getting things. So if you have not gotten one, you must strive to go and get one. Because if you don't have it, it's very difficult to do a transaction. Go forward. No bank should borrow you money if you don't have it. To pay your taxes, you must use it. For bank to open account for you, you must have it. Nobody will open account without you having it. So, and they will link it. They won't come to you and say, come. Since you have BBN going forward, you have national name, national identification numbers. What have that? All those things can be tied to they can use it to give you national tax identification number without coming to you. So automatically, whether you register or you do not, there's a possibility that you are going to get a T number because you can be tracked. They know your BBN, they have your NIN, and they also have CAC records for them to know that you actually exist. And with that, they can track and give you your T number. So because of this, we must strive to ensure that if you have not had one, we should go and get T number so that we can be business ready. If not, many things may be difficult to do going forward. They are not going to close your account. They are not going to block your account. They will not. So there is no need for to be afraid that maybe by 2026 now my account will be closed. No, nobody. They won't do that. But then we start monitoring your activities. Unlike before, they know what you are doing now. Because they will have plot, they have your TIN number, and they know your transaction. They can call up bank to say, give us any balances in the region of 10 million. Bank will comply. They will forward your details to them. And they can write you and say, come and explain to us. We have seen that you have done X amount of transactions. And we notice that you have not paid your tax. Come and pay your tax. That will be the first language. And if you want to come and pay your tax, you must have accounts. You know, for you to say, this what is my profit. You know, you should be able to record your revenue over the period. And the money you have spent in terms of material costs, pay salaries, buying diesel, stationaries, and other items that go with production. And at the end of the day, you have a balance if it remains. And if it does not remain, you can be allowed, you won't pay tax, even they will allow you to carry that losses for the next 5 years. That is, you are doing business. Government does not want you to also go back up. They want you to remain in business. So therefore, if you don't make profit, they won't say come and pay tax. You must have made profit before they can say come and pay tax. But for you to be able to defend that I have not made profit, for you to be able to say that even though you are seeing inflow in my account, it's not my money. Even though you are seeing inflow, it's not profit. You know, you must have something to explain to them. You know, you can't just say, this money you are seeing is not my money. No. What is it for? They want to come and explain. So therefore, we must do things properly by keeping records. If you don't have, when you are sending money to people, put narration there to buy diesel, to procure this, to do this on your phone. So even though you don't have the time to put it down in writing, or you don't have vouchers, you know, when the need arises, you can easily go to your DC bank statement. Okay, you can see it. This one was used for this. This was used for that, and they will listen to you. But if you can't explain, they will insist that you must pay tax on the money inflow into your account, and that's why the issue of keeping records is important. Now, what's the penalty? If you don't keep records for the first month it occurs, you are liable to 50,000 naira the first month. Subsequent month, you will also be liable to 25,000 naira for not keeping records. Because if they come around for audit and they notice that you've not kept record, then you are liable to pay penalty for not doing the right thing. Next. Now, let's compare business name and company, limited company. What is even the advantage? Do I need to even say business name? Why must I go limited? Is it necessary? Fine. Business name is accepted. The way the business name is, one is limited, one is enterprise or venture. It does not have limited or by guarantee at the back of it. Now, for one, if your business is not a limited company, that means the business and yourself, you are the same. It's not a limited company. It means that your business name and you yourself, you are the same thing. And therefore, whatever your business does, you are the one that do it. And therefore, you are liable for its liability. But if you register a limited company, they are still your business as a separate entity from you. Your business can sue people and it can be sued while you are working freely on the road. So it's seen as an artificial being that is allowed to operate on its own different from you. And the liability of your company is not yours. The company will be allowed to pay tax, to do other things. Even if the company commits punishable offense, it will be sanctioned. It can't go to jail, but you can go to jail. You can go as a business name. But a limited company, if there's infraction, what they do is that they say it's sentence. But what they can do is to fine that company. Aside from that, for the status is not separate as such. The incorporated company is a legal entity of its own. Tax type is personal tax to pay if you register business name. What does that mean? Personal tax means that at the end of the year, the government expected you to say, this is the money I've generated for the whole year. Whether you're in employment or you are not in employment, even if you have made profit from your business, water business, but that business is not incorporated, you need to prepare account of your business and show the profit. That profit will be taken to, it's now your profit as individual, because it's not a limited company. So that money, they will tax you, and therefore you will pay tax as individual, and that tax is paid to the state government as an individual. But the limited company is a separate company, and tax is expected to be paid as a company, and that tax will be paid to the federal government. You are allowed to claim all the expenses as a company. Even though I don't want to go under microphone, I can tell you the benefit of being a limited company, because your car now, you have a personal car. If I were you, I don't need to own a personal car. I can allow my company to buy me the car, and I'll be using it, because as a capital allowance you allow, the government will allow you, your company, to take. If you have bought a car, let's say 5 million naira, government is saying that for buying a car to run your business, you are allowed to take 20% every year, because that vehicle is also generating money that will allow you to be able to pay tax at the end of the year. So for every year, take 20% as an expense for buying that vehicle. If it's a personal car, they will not allow you. So therefore, you can even be riding cars inside your company. You can see one of the advantages. And the company will be the one bearing the cost. But if you buy a car of 20 million, 30 million, your personal name, you'll be asked to pay 5% benefit in kind for using the car. So it will not be allowed as individual. You can't bring it in as expense under personal business. Or you are able to speak to the advantage. Credibility. If you want to borrow money in the bank, the fact that you are separated from yourself, they will easily give you money. If you have a limited company, bank will want to do business with you because you are a limited company. Most of those advantages are not available for a business name. Though you prepare account, they will stretch you. If they know that they can see physically that you are doing very well, they will allow you, they will give you money because they can see physically that, oh, this man is doing very well, but they just won't let you go. But ideally, they would rather prefer to do business with a business that is separated from its owner and can easily get more. So, limitation here is that owner is under business name, owner is liable, but for a government company, there are a lot of compliances. If you will have to pay pension, you will be asked to comply with NSIGF. This one that the guy is telling us now. All those things, especially that you have a worker and you're coming, all those things must be cared for, even though it's our business. So for me, I will advise, if you will take it, it's good to go limited, separate yourself from your business. We need just to have records. You know, on that side, we'll be speaking to cost management later. How do you know even your cost? When you don't track your activities, you are not tracking your sales, you are not tracking your expenses, you are not tracking the cost of diesel, you are not tracking, wages and salary you are paying. You are just using your head. Oh, okay, water, cost of production, 150, I'm selling 300, so therefore I've made 150. Who said? By the time you analyze closely, put the cost of wear and tear, put the cost of vehicle, put the cost of other things, you might end up, there is a cost. That's what we call cost in sunk cost in accounting. What does that mean? It's total cost. You have a property you bought in the last 10 years. As a business owner, you're supposed to see that property as if you rented it. Don't see it as your own, even though it's your money. That's the only way you can quantify the cost properly. Because if you don't do that, you will see that after all 20 million, 30 million property, you are minusing it from your business. Ideally, you're supposed to discount that, amortize it over the years. Because the money you brought into that business was from somewhere. Is that not? So therefore, it's as good as you loan the business, and it should be considered when you are considering cost of your, production. But because we don't do proper accounting, and we just look at the revenue 300, cost of production 130, 150, you are fine. 150, go and sell water 200. You get? Because that's not way companies that make profits behave. They quantify every couple, and therefore at the end of the day they can see where they are, and that's why you see that their business is always profitable and stable. But because we believe that we are doing well, cost, revenue, that's all. Other expenses involved are not considered. I say, oh, I have a margin of 30 and 15 naira, I better go sell for 200. And that's why you discover that you are not really growing, because you are not doing the right thing. Now, aside from that, government will not accept anything going forward if you do not have evidence to show what you have done. You cannot tell government going forward that, no, I have not made profit. What I have generated this year is just 200,000 naira. Fine, if I generate 200,000 naira, tell us, show us evidence. If I bought something to help your business, let us see it. If you can't explain it, you are in trouble. They will pay the value and they slam you tax. So therefore, we need to keep log of our sales, we need to keep log of our purchases, we need to track diesel, we need to track maintenances, we need to track all sorts of expenses. Our assets, the vehicle is expected, if you buy a new vehicle, it's expected to be zero in your books after 4 years. Ideally, that vehicle, assume that if it's a new one, that vehicle will be zero in the next 1 year. Therefore, the cost of buying that vehicle supposed to go into your cost. Every year, you take 25%. Let's say you bought for 10 million naira, 2.5 million supposed to go into your cost for the year. Second year, 2.5 million supposed to go into your cost. So that after 4 years, you'll be able to have savings to buy another one. But since you have bought the vehicle, you are seeing it as a free motor. So therefore, go and sell water. You are not writing it off. And when that vehicle goes bad, you don't have money to buy another one. And you are saying you are not doing well. That's not the way a proper business prepare account. They consider everything that goes into that business as a loan. The property itself is a loan. The vehicle itself is a loan. Everything is a loan. So therefore, they see it from a top party angle. That if I are taking this from top party, how much will you charge me? And you charge it appropriately in your business and in some part of your cost. And that's when you can be talking about true profit. If you are not doing that, what you are saying is you are start looking at cost versus revenue. You have not started. And that's not proper accounting. So keeping records will help you to navigate and to solve that problem. Next. Now, as I said, if you are not keeping record, government will not even allow you to go free. They say come and pay me 50,000 naira as a company for not keeping records. And if it's a business name, you also pay 10,000 naira when they come for audit for you not keeping records. Now, to speak to this, when I spoke about VAT. What is VAT? Value added tax. Government wants you, if you are the child, water is not vatable. That is, because it's essential good, we are not paying. Government is not saying any hard X amount of money when you are issuing out invoice. Government will say, charge that man additional 0.75%. Add it on top for me as a value added tax. So for every invoice that you are buying item, that person will charge what you call rate. If it says my computer is 1 million naira, by the time it's going to issue invoice, we will have added 7.5 to it. So when you are getting the invoice, you will see 1,075,500. You may be wondering, what the person has done is to add what we call value added tax as requested by government to it. Because if it does not do that, you'll be penalized. You have to pay for not charging it. And there is also what we call withholding tax. Government is also saying that you that is paying the man withhold X amount of money and pay to me. Issue that guy credit that I've collected this tax on behalf of government. I will remit it to the government. When you want to pay your tax, show them the receipt, claim credit. They will allow you to reduce it from the eventual tax that you are going to pay. That's the withholding tax. So we are mandated to, if you are the one selling, water is essential good, and we are not paying VAT on it. But if you were to be that you are into another thing and you are issuing somebody an invoice, you are expected to add VAT to it, value added tax of 7.5%. And if you are the one that is buying, they are saying that if you want to pay that person, take X% as a withholding tax. If it's a contractor, it's 2%. If it's a service like professional service like me, they say take 5% of the money you are paying to me, the service charge, and pay it to the government. So when I want to pay my eventual tax, I will show them the credit that, oh, when I consulted for Madam Rose, she has taken 5% from my invoice. So therefore, I will use it to reduce the tax that I will pay. Government will allow you to do that. So for not doing it, there is a penalty for it. And when you have done that, we are also meant to remit these taxes to government. For value added tax, the due date is 21st of the following month. For any value added tax, whoever has collected it must ensure that the following month, within 21 days, he pays that VAT. And for withholding tax, the same thing. If you have withheld any taxes on invoices, make sure that you also remit the VAT. You know, it's not only a material that we are buying. We buy many other things that may be vatable, that may be withholding in nature. All those things we must also consider. Is this invoice? Is it something we need to withhold? You check that withholding tax and check the person that you issue that person a receipt that they have taken withholding tax from you. And when we hold it, when you spend the tax at the end of the year, it will show you that even though my tax will be 200,000 naira, I've earlier paid 50,000 naira in form of taxes withheld from me. And so therefore my net tax will be 150,000 naira. Is allowed. Net tax that we pay as a company. If you are an individual that is running business pay, it's going to pay personal income tax. That's what you will pay. But if it's a company, it's going to pay company income tax, and the rate is 30% of your net income. What does net income mean? It means that when you have taken away all your expenses, you have generated 200,000 naira in revenue, and you have taken away maybe 180,000 naira as an expense or expenses. You know, you are left with 20,000. I mean, government says out of the balance of 20,000 naira, you are going to pay me 30% of the 20,000 naira, which is 6,000 naira to the government, and that's what the rate of 30% means. And you are expected for every year, the following year, within 6 months, you're supposed to prepare your account and pay your tax. You can pay it January, you can pay it February, you can pay it March, you can pay it in April, you can pay it in May, you can pay it, it must not exceed June. Anything from June, they will say you will pay penalty. The first month is 100,000 naira for not giving to the 6-month window. Give it to you. You have been given 6-month window to make sure you pay the tax, but for not giving to it, after the 6 months, they will begin to charge you a penalty. And the penalty for the first month is 100K, following month, additional 50K will follow it. Then capital gain tax. Capital gain tax is when we dispose our assets. What is our asset? Like motor vehicle, like our building, like our computers, anything we dispose is what they call capital gain tax. So if they be gain, it may be loss. If we have sold beyond the value, it's a gain. If we have sold less than the value, it's a loss. And they are saying that you also need to prepare your account in that manner. And If it's a gain, let's say for example now, I bought a vehicle for 10 million naira, and in my books, I'm able to provide, in other words, for wear and tear, 5 million naira in the last 2 years. That is, we believe that after 4 years, that asset will be written off of our books. That is, the vehicle will no longer be in existence after 4 years. That is the policy in our company. Every year, we are taking away 75%. So now, at the time we are selling that vehicle, we have taken away 5 million naira. So the value of the asset in our books is just 5 million naira. Government is saying that if you have sold it for, let's say, 6 million naira, you have made 1 million naira profit, and as such, you will pay capital gain tax of 30% on the profit of 1 million you have made, which is what? Which is 300,000 naira. That's what they call capital gain tax. And you are expected to pay within 30 days after the month you have sold. That is it. So at the end of the year, when you have prepared your capital income tax, they will sum it up and take the taxes together. It's the same rate with company income tax. Next. Now, I think I've spoken to this. But VAT. So therefore, you can claim credit for it. But what you are claiming credits for must be the same similar item. You understand? If it is an electronic that you are exporting, it must also be that you importing. It must also be electronic. You cannot claim input VAT for something that is not similar. So you can't claim input VAT. In other words, you are expected to take what they have charged you in the cost of getting that water ready to the market as your cost. So the whatever VAT you have incurred must form part of your cost because you are exempted from taking VAT. But from all we have said now, that does not stop you from filing returns. Whether you are to pay to charge VAT or you are not to charge VAT, at the end of the year, or at the end of the month rather, you are expected to do what? File what they call what the filing return is to say that this month I don't have VAT to pay. This month I don't have any utility tax to pay. So that's the meaning of filing. So the fact that you don't have taxes to pay does not exonerate you from filing returns, because if you fail to file returns, you are still going to pay penalty for not filing returns. Differentiate it. You may not have profit, but the fact that you don't have profit does not mean that you will not explain to government that this is my activity. I don't have tax to pay, but you must also tell government that this is my activity. That's the meaning of filing returns. Next. So this spoke to frequency at which we need to file returns and the rate. For supplies is 2%, professional service is 5%. I've spoken to that earlier. Next. So I've also spoken to I don't even need to repeat myself. Electronic fiscalization system, which I said that government is going to plug into your software. You have to make sure that they track your transactions, so that when you come around and you say, no, I've not done anything for this year, they can tell you that, okay, you have done so much and you are liable to pay tax. Next. So I will share this slide with you. These are basically penalties for not complying. They are penalties for not doing the right thing. So this slide will be shared with you. The penalty of not paying capital gain tax, you pay 10% of unpaid tax and apply interest rate. So there are numerous there that we will share with you so that you can see it, so that you make sure that you have the knowledge and you make sure that you pay in time. Next. So going forward, we must embrace digitalization. We must embrace using technology to do our business, because government wants you to use e-invoicing. They want you to generate invoice to your customer. They don't want you to be writing it manually, and for you to do that, you must have a software, you must use computer, you must try as much as possible to comply. You have accounting software that can help you to track your business activities. If you are interested, you can get one on the shelf, they can build one for you. But as much as possible, we should see how we can try to, integrate technology into our business. So roadmap for complying, we must ensure that we obtain our TIN. We must also register our VAT if we have not done one. We must keep records. We must ensure that we file our taxes promptly. We must ensure that we integrate electronic verification system. We must ensure that we use digital accounting tools, and we must try to engage professionals when we have challenges with what we need to do. We need to check whether we must formalize our operations, unlike before that we don't keep records, maintain accurate records, as I have mentioned on this, and ensure that we run away from penalty by making sure that we file our returns as at OND. Thank you. Question and answer.
Antoine, thank you, Mr. Olawiye, for that beautiful explanation on tax. What I know is that in 2026, there will be no hiding place. So I have some questions which I'd like Mr. Olawiye to answer. And please prepare yours too. I think the first question I have, not all of us use banks. We have producers with large volume and producers with small volumes. Some producers just sell maybe 500, 300 bags. They don't use the bank. Am I right? They don't use the banks at all, right? Some producers also sell cash and they change to dollars and put the dollars somewhere. So I want you to speak to that. Is that an option? Or will you say that because I'm not putting the money through the bank, then I must be hiding something, when in fact I'm collecting with my left hand sales and I'm using the right hand to buy packing bag, roll, pay operator, do other things. At the end of the day, the money remaining in my pocket is from sometimes 5,000, 10,000, nothing to write home about. By the time I buy small okoroko and shower and this, is finished. So I want you to speak to that, sir. Second question I have is that you mentioned that some producers have bought their assets in their personal names. So they bought it in the name of Dr. Nelson, for example, and you are recommending that it's better to separate the company from the individual, so that if they come after, tax wants to come after something, they will not come after you as an individual, they will come after the company, and the company cannot be put in jail, probably will just fine, the individual will stand behind the company. So if I bought trucks with my factory in my name, can I now transfer it and I set up a limited liability company? How do I transfer it? That's my second question. I'm not done, sir. Okay, my third question is that in this our business, some people also survive. Not everybody goes to the bank for formal loan. Some people borrow money from husbands, from wives, from brothers, from friends. It's still a loan, but there's no documentation to say that I collected 5 million to buy one Korope pickup. So how do you account for that? Because they will see the inflow, the money has come in. How is that in the eyes of the law, of the tax authorities? How do you handle that? Because I'm sure most of us That's how we borrow our money. We don't go to the banks anymore. Thank you very much, sir.
The first question, keeping money under your bed, if the money does not enter the banking system, they will not be able to trade it. But that notwithstanding, you can't hide. You transact, you buy roll from a Omnic or whatever Ecoplus, they are documenting your transactions, right?
They will submit records based on your transaction and your name will appear so they can see you. Going forward, you are buying truck. The guy will put your name there as the buyer. They can see you. And if you are paying that person, I doubt whether you are going to carry cash there. You are likely to transfer. You can't be buying a truck of 10 million, 20 million. You put inside your DC and you carry it to the bank and say, this 20 million I want to deposit it to buy also. And if you pay the 20 million, EFCC will say, this chunk of money being paid now. Let's charge this man. Why is he paying 20 million cash? Are you with me? So if the money does not enter banking system, it can't be traced. But you can indirectly be traced because other people that you transact with that may likely to keep records of your activities. There was a time they called me. I was doing one business with MTN subsidiaries, and they told me that I should come and pay my tax. I was wondering how. Most people have been paying. They have withheld a lot of my invoice. At the same time, adding VAT to some transactions. So therefore, I was not aware. But I was just called that, okay, we noticed that you are doing very well. Come. So I ran. But I can tell you going forward, it will be difficult to run. So I would suggest that we need to do the needful. If you have revenue, 100 million naira and less, you are not going to pay tax. Going forward, if your total revenue for the year is 100 million and below, you are not paying tax. But that does not stop you from filing returns. You must prepare an account that shows that your revenue is 100 million and below. You understand? So that is it. But anything above that, you are liable to pay tax. Personal property being transferred to company, you can do it. Sell it to your company. You can sell it. Prepare a formal document and say this vehicle is being sold to S&Y Cell Limited. You understand? And you put a value to it.
Nominal value?
No, the written down value. Because that's what we call arm's length transaction. Whatever you have done, they will check what the value of that stock. If the value in the market, if they were to buy it, is 5 million naira, and you said you have sold it, or your company bought it for 10 million naira, they will say no. The price of this in the market can be more than 5 million naira. So therefore, you overstated the value. So, and that's what they call arm's length transaction. You must look at what the market value of that asset. So if you are transferring to your company, it must also be transferred at the market value that can be verified by a third party, trying to find the value independently. Then personal loan, whether personal loan or borrowing from the bank, borrowing from your family, it does not make any difference. What is important that you document it. Before now, your wife can transfer money to you and say, "Okay, I bought this $5 pay me back." Then you make it formal. No, you are not doing document, which is supposed to be so. Supposed to do prepare a small document to show that you actually borrow that money. But when you are doing the transfer, ensure that you put loan, it will ensure that they will know that you actually borrow that money. And when you are preparing your account, you must also take it as a loan in your books. That 5 million was borrowed from so person. That's how you should be reported. A fourth part of your liability as part of money you need to pay. Thank you.
Thank you, Mr. Alawi. I'm afraid. I don't know about the rest of you.
Atwam. Please, I want you to clarify what this. We're talking about FIRS. What of LIRS? Because I used to pay my personal income tax and my husband used to pay for FIRS. And Lagos State came and said that I must pay LIRS. That FIRS is for Abuja. That I'm doing business in Lagos State. So as far as that is concerned, I also pay for Lagos State. I want you to clarify what this is.
Okay. It depends. It depends. What the Lagos State will be asking you
is your personal income tax. Your personal income tax. You as a person, you are meant to pay tax different from your company. So if Lagos State is coming after you, they are saying come and pay your personal income tax. But if you run a business name, as I mentioned earlier, you are not separated from your own business. So what you are going to pay is that you are expected to prepare a report of your business activity for the whole year. Be it the one you gain from employment, if you are in your employment of your company and you are being paid salary, and the one you make from your personal business, which will be reported as long as income is generated and you are paid either dividend or you take the whole profit as a personal profit. Government Lagos State will say, since you are not separated from your business, it's not a limited or incorporated company. So that business is same as you, and you are going to pay Lagos State personal income tax on your global income. On your global income, which is income from your business which is not incorporated, and income from your employment if you have one. So those will be put together, and they will allow you the reliefs that are available for individual, and they will subject the balance into what they call timetable of rate. There's a guaranteed rate for which they will subject you, and whatever it comes out, they will say you need your tax for them. So the tax you are paying to state government is personal income tax. The one of Everest has to do with unless your husband is in the military, because if your husband is a military man, his tax is federal. You understand? That is income tax you pay as individual to government. But if not, the armed forces generally, police and the likes, goes to the federal government because they are property of the federal government. Aside from that, what you pay is company income tax. Company income tax is collected by federal government, which is company that is limited. Incorporated companies are limited companies, and their tax will be paid to federal governments. So you are employed. Other sources of income form part of your income, and as such, you are expected to pay tax on every income. Thank you.
Any other question?
Atwap. Hello, sir. I want you to show more light to shed more light on company income tax.
Company income tax is a tax you pay on your company profits. Are you with me? Company income tax you pay on your company profits. That is, after you have prepared you have recognized your revenue from the company alone, not personal income, but company that came from the sales of the company, and you have taken away expenses arising from that business as well. Then you now have balance. It's from that balance that you are paying company income tax from. You understand? That's company income tax. If you are borrowing money in the name of the company, it's also an allowable item. You are also supposed to also say, I pay interest of X amount. It will also be allowed. At the end of the day, when you are taking care of all the expenses in whatever form that relate to your business, not personal, expenses that relate to your business, then the balance is what you pay tax on, and the rate is 30% of what is remaining. Are you fine?
You have another question?
Atwap. There are some companies that have staff that most of their staff they are mandatory to pay tax. Does this those tax that the staff of that company will pay, is it part of the company income tax?
No, but it's allowed. But meanwhile, it's allowable expense for the company.
You cannot escape it.
Administrative expenses of the company. But that person will be asked to pay personal income tax. Not company will take it as a part of the administrative expenses that I pay staff
I've generated revenue of 100 million, my salary and wages is 70 million, you know, that's for coming. That person's salary is part of what is accounted for as part of expenses. But as individual, you will pay Lagos State, Jigawa government, if you are in Jigawa, or you are in Bauchi, you pay the state government your personal income tax.
Atwap. Okay, I'm going to ask a question that is related to him a little bit. Now, for somebody who is working, and normally the company will deduct payee. Now, at the end of the year, how is the government going to treat any other money that goes into the account? I don't know if you're getting me. Let me start again. An employee who works in a company, payee is always deducted. Now he's being paid his salary. Now with this new reform that is coming up, that salary that goes into the account, are we going to pay another tax again?
Yes.
After you pay,
Is it individual or the company?
No, the individual, not the company.
individual, the workers of the company.
No, see, no. Hold on. You are not paying another one payee. You are not going to pay another one payee.
No, sorry, addition. Now the company pays him salary. They deducted payee already.
Yes.
At the end of the year, are we going to pay another one? Because before then, there might be other income entering into his account.
Yes, you pay for on that other income.
How would they differentiate?
Yeah. What it is the tax, they call it, the one you earn from your salary, they call it earned income.
Yes.
Other income, they call it on-hand income. They will put the two together. Are you with me? As your income. One is just like paying is just like advance tax. You pay it in advance to government. Are you with me? So when you are paying your personal income at the end of the year, they will look at your salary as a whole. They add other ones to it. Then they will not calculate what you are paid. Then they take the credit, the one you are paying in advance, you pay the net.
Okay, to the main question now. You talked about a limited liability company and business name. Under the liability company, there are allowable expenses. For the business name, is there any allowable expenses for business name?
Yes.
I don't know, can you specify?
You have, if you are living the rented apartment, you are allowed to, what's it called, take 500,000 cap maximum. 20% of your rent is an allowable item. Before now, we have 20% of your gross income, they call it consolidated relief. But for 2026, there won't be something like that again. What we have is a 500,000 naira cap. If let's say you are a parent of 3 million naira yearly, what's 20% of 3 million? You know, that translates to 800, right? If you divide 3 million by 5, what do we have? 500. No, 600. The cap is 500. So the maximum they can allow you is just 500. So you can't take beyond that. But if it turns out to be 300, you'll be allowed the 20%, which is 300,000 naira. But that is like a seed that they won't allow it as a deduction from your income.
Let's take the last question, please. Let's take the last question.
Sorry, sir.
They were like,
It's okay. You will collect his details, right? We can't answer all the questions here and now. Ask your question, please.
Atwa, obviously at this stage, I believe all of us as employers of labor must engage accountants and tax consultants if we don't want to be shortchanged. My question goes thus. Lagos State government, they intend to charge us personal income tax. They usually ask us to pay for our workers. I don't know how that comes by. In part of personal income tax, they will ask you to pay for development and some other things like that. I don't know where that is coming from. And aside from that, I want you to kind of differentiate. Let us know the difference between capital gain tax and withholding tax. Capital gains and withholding.
First one, personal income tax, we've mentioned that personal income tax is an individual tax. But the company has responsibility to deduct and pay on your behalf on a monthly basis. Did you get? The government will hold you responsible for allowing your employee to go without deducting tax on him. He's supposed to pay tax. They don't want him to run away. So it's mandatory on you to list your staff at the beginning of the year and compute, let them know the salary you are going to pay them and what is tax due. And it's your duty to remit on behalf of your employee. At the end of the year, that your employee is expected to file his own personal income return. And when it is filing that return, that tax you have paid on his behalf will be allowed as a deduction. If it does not have any other tax to pay, it will allow you to go. But if it has additional income somewhere else, it will pay tax on it. That's number one.
Last question, please. We need to move forward.
Speaking to the capital gain tax is a gain on the asset you dispose. I mentioned that if you have got an asset for let's say 10 million naira, and that asset you have written it down to like 5 million naira, meaning that the worth of that asset is now 5 million in your books. Now you now sold it for 6 million. You know you have made profit of 1 million naira. Government is saying you are going to pay 30% on the 1 million profit you have made. That is it. For withholding tax, government is saying that for anybody that renders service to you, don't allow him to go, because the guy might run away with tax, but we want to take tax at source. You are an unpaid agent for government.
We need to
make
go.
sure that you deduct withholding tax on behalf of government and remit to government. When it's about to pay total tax, he will present that your withholding tax receipt that I paid X amount before. So therefore takes away from the eventual tax that I will pay. That's it. So withholding tax is tax deducted at source by whoever is paying the supplier.
Please, we need to move forward. Network can come and present. Thank you very much, Mr. Alawi. It's obvious that there are certain people that are important in your life. Your spiritual father, your doctor, your lawyer, and your tax consultant. These 4 people, we must get them. Mr. Alawi is here. He will drop his contact details so that we can contact him. I'm sorry there are questions hanging, but we started late, very late. A meeting that was scheduled for 9 a.m. we started almost 12 o'clock. So we have to speed up things so we can move forward. Mr. Alawi, please, can you please give your number publicly so that anyone who wants to contact you, they may have their own tax consultant, but they may want to contact you directly to use your services or to ask questions or clarify. Please give your number. 08061537494 and 09060004879. Mr. Alawi, before you go, 09060004879 and 08061537494. Mr. Alawi, no more questions, but by proxy a question has been sent to me that most of us we pay wages, not salaries, and wages are not taxable. We pay wages. So maybe you want to quickly define the difference between wages and salary. They say they pay wages, not salaries. Wages are not taxable.
Every income is taxable from the receiver. It's an income. You understand? Whether wages, when we mention wages is relative. Wages could be 20,000 naira, it could be 2 million naira. You know, what wages means that it's a direct cost, and it enters probably your production cost. But for the recipient, It's an income to him. And income is what you pay tax on. It's not about whether, and the income is, the wages you are talking about is going to be collected, the receiver that is going to pay, not coming. Coming is a direct cost, which is an allowable expenses. But for individual, there's nothing like a wages, it's just a terminology. You understand what I'm saying? So in the hands of receiver or recipient, it will be taxed.
Okay, let me explain. Sorry. So some factories, I don't know about your zones, some factories don't have permanent workers. So they are like laborers. Like you want to lay blocks here now, you call a bricklayer. He lays the blocks and goes. So they come, they pack, and they go. You pay them, how much is your money? You count it right there. So it's a direct cost, they go. The operators also, he comes, he produces you 5,000 bags, you pay him and he goes. So that's what they mean when they say they pay those kind of people wages, and they should not be capturing them on their books ideally.
Well, it will be difficult to capture, as you said. What we can do is that when tax authority comes, we explain the nature of that. But it's not as if wages by name is not taxable. But it can be explained as a direct cost. Yes. It can be explained. But I can tell you for free, every income is taxable by all standards. But because of the way we capture it, we may say that this kind of expense, there's no way you can track it. And the other they will understand it that you can't capture, there's no way you can track it. But when we mention wages, you can imagine if you pay somebody 2 million naira, they won't allow you to go. That guy is to have formalize a contract. It's not a small money. Yes. That if you are paying somebody 2 million, then you formalize contract. That's what I'm saying. So, and at the end of the day, if it's one no, let me tell you, if you have an operator that at the end of the day, by prepare his record shows that he has collected 1 million from you, and you are saying wages, they won't allow it.
So what would be the threshold for wages?
Now, for me, I won't be able to tell you the threshold. But if it's a one-knock person, it will be allowed. A one-knock activity. I know what I'm saying is it's not one-knock. Yeah. See, what we need to do, there's no minimum. Yes. What I'm saying is if you pay, no, we have said that if your global yearly income for that person, let me tell you, you are speaking to the difference between company and individual. The guy you are talking about is going to be taxed as an individual. Are you with me? And you have to, anybody that's salary, you pay a form of salary, you must withdraw tax, whether contract tax or no contract. Because the person you are talking about for other contracts, you must withdraw tax. So in other words, you are trying to formalize relationship with your workers. I said there is no minimum. What they do at the end of the year, if it is 2 naira, government will collect from you. Are you with me? Every income. That's not like just a small person. That person must pay tax. At the end of the period, if it does not leave for tax, it will claim reform. It will ask for reform. Do you get it? But for now, if it's less than 2 million naira, they say that it's allowed. If total income of that person is within threshold of 2 million for the whole year, do we have 2 million naira threshold for the whole year? If you can determine that what you are going to pay this person for the whole year is not about 2 million, you can let go. That is threshold, 2 million. But if it's above 2 million, by the time you aggregate, you can't explain it. You are meant to, you must predetermine. If you can't be predetermined that it's going to be more than 2 million, you can see how it's difficult. You must predetermine that this person and they will not get more than 2 million from you. And that one is determined from the beginning. Then it will be expensive, they will allow it. But by the time they aggregate, and it's a lot of money, they will say that is to formalize this relationship.
Thank you very much. Please put your hands together for Mr. Olawoyi. He has been talking for over 1.5 hours now. And trust me, we can spend the whole day here just trying to dissect the tax issues. So what I will advise is you have Mr. Olawoyi's number. Personally, I've also engaged him because at the end of the day, in January, from January 2nd, I don't want people knocking on my doors and I don't have a backup. So Mr. Olawoyi is my backup. But you are free also to contact your other accountants and your own other consultants. It's just that as ATWAC, the responsible thing is to have some in-house consultants. We also have other accountants and other tax experts within ATWAP. If you are interested in providing that service, you let us know so that we can also share your details. Mr. Alawi, thank you very much. At this point, I would like to recognize the presence of our regulators from NAFDAC, Mr. Prosper and Mr. Yahaya. They've been with us to Ikorodu, to Oshodi, right? Sorry, and today they are here. They will go around with us to Lekki and other zones. We also have NSITF led by Mrs. Kia and her team. They will be talking to us also. But please put your hands together for them. You are welcome, sir. You are welcome, madam. Protocol dictates that I should allow NAFDAC to speak first. Even though NSITF came first before them. Oh, NAFDAC came first? Oh, I'm sorry. Mr. Prosper, the floor is yours, sir. Hassan. So Mr. Yahaya will present on EFSAN. He's from EFSAN. He will present on NAPAMS. The almighty NAPAMS. Without NAPAMS, you can't register.